All right, everyone, welcome back. Sort of the last of our panel series that we have here. Last but not least, I should say. I am joined today by Bervelyn Enriquez. She joins us from Arete Financial and Legal Solutions. She is also the accountant that we rely on pretty regularly at Renaker Studio to just make sure that we keep the lights on and the books tight, right?
Correct.
She specializes in small business accounting, operations, and growth strategy. Just like Ted, Berv is also passionate about helping people take control of their finances. And she's here to hopefully demystify the numbers we should be looking at as creative professionals. And I say that as I know a lot of creatives aren't interested in being in the books, so
Correct.
to speak. So this conversation might be a little bit of a difficult topic to grasp, but I think there's some value that is to be had.
Important.
Yeah. So before we get started, Berv, anything you'd like to add?
Yeah, just the other things that I do at Arete is I do tax preparation, which is on the personal side, and that is also assisting with the planning of it. So that's I'll be able to answer those questions as well.
Awesome. Wonderful. Thank you. Some of the goals for today's panel. I'm hoping that we can sort of clarify some of the employment types that are out there. We talked about that a little bit with Ted, and that can get a little bit confusing.
Yes.
So maybe you can add some color around
Of course.
that. Tax preparation, you mentioned that that's an interest area for you, so let's talk about that a little. I want to help some students avoid some common money pitfalls. Not just if they're going to go into freelancing, but if they're getting their first corporate job. Where do they need to put their money? How do they need to strategize their life so that they can grow their own personal finances? And then maybe just provide some basic business setup for people who are interested in going into freelance.
All right.
Sound
Sounds
good?
Sounds
awesome.
great.
Let's get started. Starting off with some of the employment and early career questions. What is the difference between a W-2 and 1099 job?
The major differences is a W-2, you have a boss and you're an employee. And 1099, you are the boss and you are your own employee. That's one of the difference. The other difference is your pay, what you take home. So as an employee, you take home what's net pay. That means that even though you were promised a certain salary, all your taxes are deducted and you take home whatever's left. Versus the 1099, what you get paid is what you take home. And the responsibility of paying those taxes is now on you. And I think that is very important to understand because that's where the tax planning comes into play. As an employee, what you take home, you can spend it. As long as you're having the correct withholdings, you shouldn't have a problem come tax time. 1099, that's not true because even though you were going to get paid $500 and you got paid $500, that $500 is not yours. Uncle Sam wants its piece. So you need to understand how much of it is really yours and how much belongs to Uncle Sam.
Yeah, and to sort of keep the math a little bit simple, you used 500, I'm going to go up to 10,000.
Correct.
If you go and work a 1099 job, 10,000 is a little low, but you should look at that contract. Talk to Ted. But if you're going to a W-2 job, they are going to take, let's say, $5,000 of that, and they're going to put it aside for your taxes. If you go to a 1099 job, they're going to give you $10,000, and you need to set aside that $5,000.
Correct. And I just want to make a clarification because there is a misconception there where you get paid $10,000 and they took, let's say, $1,000, just for easy numbers.
Sure.
That $1,000 that was deducted from your paycheck was not all sent just for you. It's actually split up between 4 different entities: the federal government, Social Security, Medicare, and the state of Arizona, or the state that you live in. The federal and the Arizona state withholding, that is your money that you're paying in advance for the tax liability that you may incur when you prepare your taxes. Social Security, Medicare, well, that's everybody pays for that, and we all pray that it's there when we retire. And it's very important to understand that because when you do get a 1099 and you file your taxes, you have to pay your own Social Security as the employer and as the employee. And that's where it can get expensive for somebody that is self-employed or works for themselves. So it's very important to understand the difference and where that money's going.
Yeah, and that's not even counting health insurance,
Correct.
benefits, things like that. So
Correct.
we'll get there. How do these different employment types affect how creative professionals should prepare for taxes and manage their income?
Again, if you are working for somebody and you are an employee, as long as you fill out your W-4 correctly, W-4 is where you tell the government how much to withhold to pay into federal. And that's usually based on your filing status. So if you're single, if you're married, even if you're married but you're filing separate, you select that one. And then the third one, or the fourth one per se, is head of household, meaning that you're single but you have dependents or you have kids at home. That's one of the sections that you fill out for W-4. The other section is how many dependents are you claiming on the return, because there are credits that you will receive for those dependents that lowers your tax liability, meaning that you don't have to pay in as much and you have a little bit more on your paycheck. Versus 1099, again, that is completely up to you. That takes a little bit more math because you have to take into consideration the business expense. Yes, you might have gotten paid $10,000, but there is expenses behind that. And there are deductions, meaning even though you didn't spend money, you still can lower that profit and pay less taxes. So it's very important to understand what your profit is off of that project, or in general what you're going to profit that year, because then once we know what your profit is as a tax preparer, I can tell you what your tax liability is going to be, and then also see if you do have the profit to invest in any retirements that are tax deferred and can help lower the tax liability in that year.
And those retirements that are tax deferred being?
For self-employed would be what we called simple or SEP, self-employment plans, and it allows you to put away up to 25% of the profit that you made that particular year.
Wonderful. Yeah, I think those distinguishments, not just between the retirement, but between the different employment types and the withholdings and all that kind of stuff, it can get challenging, especially if you're not particularly versed in tax law. So that's why having a tax preparer is really
Very
wonderful.
important, exactly. We can break that down for you.
And as a general rule of thumb, if you are a 1099 contractor, is there a standard percentage of income or profit, we should say, that is worth setting aside for taxes later on?
Yes, there is. If without getting into details of having solid numbers in front of me, I usually advise anybody that is self-employed to do 30%. Yes, that is very, very high, but that covers your income tax rate that can range between 10, 12, or 22%, but also your self-employment tax that can be 15% by itself. And then the state tax in Arizona runs about 2.5%. So even though 30 might be a little bit less, the income tax rate is really based on how much you're reporting. So usually when you meet with the tax, it's very important to meet with the tax preparer when you're thinking of being a freelancer, or if you're already starting to earn money, because that profit is going to determine what bracket you're in. So that's why my safe number is 30. But if you're making really good money, it could creep up to 45%.
Yeah.
At that point, if you are at 45%, I'm already talking to you about an S corp, which we will address later, because that will give you tax savings.
Yeah. And I think it's important to note, too, that tax law is always changing. So while you're saying these figures now, who knows what the future has in store?
Correct.
That could change. I think it's important that students, if they're concerned about if they're a 1099 contractor and they're concerned about how much tax liability do I have, sit down with the tax preparer.
Correct.
Especially if you aren't particularly versed in reading the tax code.
Correct. And if you can start making into good habits of putting away about that much, 30% of every profit dollar that you have, it sets you up for having good habits, because eventually you're going to have to do that through your payroll. And again, I will refer why. Yeah. But not only that, the money, you set it aside, and then come tax time, you already have that money, and it helps you be disciplined to understand where the money is going and coming.
Perfect. Yeah, great advice there. What are some considerations beyond just job and salary requirements that you should take into account when you are looking for a new job?
Definitely. A really big one is what kind of benefits do they offer? The insurances that they offer, health insurance, dental, vision, how much do they cover versus how much is deducted from your paycheck? Retirement plans, definitely retirement plans. One of the reasons I like what I do is because not only do I look out for you right now for your business, but also in the future or when you're working. You want to make sure that your future is taken care of. You just don't want to spend 20, 30 years working and then retire and have nothing to show for it. So retirement, especially if your employer is willing to match, that is free money. That is money that even though you may not get to touch it, eventually it's going to grow and it's going to benefit you.
Yeah, I think before I met my husband, who you've had a wonderful opportunity to work with, he's our money guy. I don't think I cared about retirement, especially not.
And nobody does. And I completely understand. You know, you're in school right now. You're getting ready to graduate. Retirement is so far, but believe it or not, it comes sooner than later. And what you have on your side is time. Yeah. It's time. If you put away money now, you have time for it to grow. And that's, I mean, we're kind of dabbling into the financial side of what we do at Airtape, but it's really, you do have to put it in your mind. I like to plant that seed, as I like to say. The business you may not afford to put away a whole lot into retirement, but at least the seed's planted. Yeah. And when the money does come available, that you start doing it. And if you see it as an expense, in the normal bill, it becomes a good habit to have as well.
Yeah. We met with a few different industry professionals in a previous panel where we had in-house corporate, in-house public, and agency people, and each of those different job types have different retirement options. If you go to a corporate, they may offer 3% match. If you go agency, maybe it's a little smaller, 1% match. If you're freelancing, you got to set up one of those independent retirement accounts. Public, at least in Arizona, we can get up to 11% matches. Yep. So the range can be very wide. And while we're talking about retirement here, what is your advice for that match? If your employer offers a 1% or a 3% or an 11% match, well, how do you know what to put into retirement?
You definitely tell it to match, and it's whatever you're putting in. They're going to match it, and you definitely want to do the amount that allows them to match you dollar for dollar. So, and it's also a double benefit because not only are you putting away into your retirement, but it reduces your taxable income. So that means that you're paying less taxes right now. So whatever it is that they're matching, definitely take it as much as they're doing.
Wonderful. How do you plan financially when you're not getting some of those benefits like insurance or paid time off or retirement plans? How do you plan for that?
Well, the most important thing about planning is you need to understand your numbers. You really need to understand your numbers. And as creative individuals, I understand numbers can be very scary. I work with a lot of clients that don't want to look at their numbers.
You're talking about me now.
No, not necessarily, but it's one of those that I've noticed that people that are creative, I understand you are working for yourself because you are passionate about X, Y, and Z. And sometimes numbers is just not your cup of tea. But knowing your numbers, knowing how much it costs you to live, knowing how much you need to bring on the personal side, not just the business side, but on the personal side, really helps to plan it. Because if you have to pay for your own health insurance, even though the company might pay a portion of it, when you're self-employed, you still need to understand that that's money that is going out the door. Paid time off, there's really no paid time off for a business owner. There's a saying we like to say, there's nothing small about a small business owner. When you're a small business owner, you are everything, especially in the beginning. You wear all the hats. You are the accountant, you are the receptionist, you are the coordinator, you are everything. So I understand that position, and sometimes you don't have the money to hire out. But as you're growing and understanding how much money is coming in, you will know when it's the right time to make a decision and bring somebody to be your receptionist, to be your office manager, to be your accountant. And that's why it's very important that's why it's very important to look at the numbers.
Yeah, and when you have someone in your books, they'll tell you, hey, you should probably think about this.
Correct. And then the numbers will tell you what's going on, as much as if something's working or if you're spending too much time on something, or if a product is selling or if product is not selling. So don't be scared to look at your numbers. Doesn't necessarily mean that you have to do the adding
Sure.
of the numbers, but just don't be scared to look at that profit and loss.
Yeah, absolutely. If your job doesn't offer benefits, what should a really anyone, whether you're a new graduate or a professional, what should they be budgeting for on their own?
As far as
Things like those benefits,
the health insurance,
things like that. How do you know what to budget for those things?
definitely, again, you want to know what some coverage would cost you when it comes to like health insurance and vision. I know it's a big hot topic as far as the premiums out there. They're not very feasible. But when you're self-employed, you do get to write those off as a deduction versus an employee, meaning you have a boss and it's being deducted from your paycheck. Those you don't get to deduct. So you do have the benefit of having that as a write-off. So you definitely want to be able to budget that. And again, just understand how much money is coming in to cover that. If that's important and a priority for you, then definitely make sure it's part of the expenses.
Yeah, absolutely. A little bit of a change up here. There are all kinds of creative ways that we get paid in the creative industry.
Yes.
Some of them are completely above board.
Okay.
Some of them might be under the table payments, no contract for miles, no clear pay structure. What are some financial red flags to look out for, whether it's in your first job or as a freelancing professional?
When it comes to being an employee, something you really want to look out for is making sure you understand what your job is, what your position is, what you're being hired to do, and what you're going to get paid for it, and understanding how often you're going to get paid. So if you're an employee and you're on payroll, usually you either get paid twice a month, every other week, or biweekly. It shouldn't move from that. Once you've hired on and the company says, okay, you're getting paid every other week, biweekly, it shouldn't change. There should be no reason for that to change. So that would be a red flag if, hey, payday's coming up, but your boss says, guess what, I'm gonna pay you on Monday. Short of it being a system issue, which does happen, but just because they don't have the money or other than that, kind of keep an eye out for that. Especially in small businesses, things do happen. Yeah. You can give them a little bit of grace, but it's harder to see things like that happen in bigger companies. And then the other for the self-employment, Ted is the lawyer, and I like to say Ted is the lawyer, I'm the tax preparer. We don't necessarily have different rules, but if you get paid under the table, it is your responsibility to report that money. It's not necessarily a bad thing. It's not necessarily a bad thing if you don't get a 1099, but if you are at risk, yeah, you're putting yourself at risk. If you're willing to take that risk, just be aware that it's a risk you're taking. It's not necessarily bad, but if you don't sign a contract, just know that you might lose out on getting paid because there's nothing to enforce there.
Ted may want to add a little payment terms line in that contract.
But definitely as a 1099, that's definitely a red flag. Being asked to do more work than what was agreed upon, but there's no conversation on additional payment or restricted of what you're selling or not being able to use your creative content in the future, that's something you might that makes you question if you want to continue that relationship.
Oftentimes in the industry, when we're asked to do more work than what's in the contract, we like to call that scope creep.
And when you're starting out, and I see it happen, when you're starting out, you really want to please the clients because you're trying to get your name out, you're trying to get the reputation. Mary used to say customer service. Mary said used to say that we would even wash your cars when to come in to for you guys to come in. But now we get that, I understand that, but just be mindful because unfortunately people will take advantage, and just trust your gut on that one for sure.
Yeah, absolutely. For context, Mary's the other owner within Arete.
Yes.
She's fantastic. She's helped us
We
do
love
some
her.
tax preparing.
Yeah.
Mary's great, so
Definitely.
little name drop there. How can students tell if they're being classified correctly by an employer? I asked this question for a specific reason.
Yes, I'm glad you're asking it.
I've had some interesting situations where it's like, I'm an employee here, right? And that may not be clear. So
Correct.
let's walk through that a little.
So the difference between being an employee and self-employed really comes down to if you have a boss or not. What I mean by that is, as an employee, my boss is going to tell me how the work gets done, what time I show up. They have every control of what I'm doing and how I'm doing it. I have no say. I'm bringing in the skill set to get the job done, but I have no say. I can, but at the end of the day, the boss is the one that has the final say. Yeah. So if they're telling me what time to show up, if they're telling me if I have to wear a uniform and they want the job done a specific way, you're an employee. Yeah. A contractor is somebody hires me to do a job. They're going to pay me an X amount of dollars to do it, but they're not going to tell me when. We might agree that it needs to be done by a certain date, but how quickly or slowly I get that work done, that's up to me. I make all the decisions when it comes to the work. Okay, and that's really the big difference is, please be careful. There are employers that will hire you as an employee, but pay you as a contractor. Why? Because they don't want to pay the Social Security and Medicare. And again, that responsibility now falls back on you, which on tax time can be expensive.
Whether you know it or not.
Whether you know it or not. And you are an employee because you're showing up to their place of business. You're not doing that work at your shop. You're not doing that work at your home. For creative content, I can see how it's a little bit different because you might have if you're painting a mural, but it's a one-time thing.
We even have sometimes in-house contract roles where you're hired for a specific amount of time. We'll give you a desk. You can sit there. But there are limitations on what, if I'm hiring you, there are limitations on what can be asked of you.
Correct. And so basically, if you're feeling micromanaged, then you are an employee. And if they let you do your work, you're a contractor. Yeah, very nice. Very important.
Yeah, very nice. What happens if, broad question here,
Sure.
What happens if you don't save for taxes, particularly as a freelancer, but also as an employee filing as a W-4?
Okay, so we were talking about you prepared your taxes and now you have a balance due to the federal and state. Unfortunately, within the last couple of years, there's been these dormant penalties. They've been there. IRS has just not enforced them until recently. So they're not satisfied with you just paying the full balance come April 15th, because previously, as long as you paid your balance by April 15th, tax day, you were not to incur any interest or any penalties. So even if you have a balance due and it's more than $1,000, IRS is assessing some penalties for not paying in enough throughout the year. They want their money throughout their year. They're not going to wait till tax day anymore. So you can definitely pay the balance at that time, but just be prepared. You might get a letter later on saying you owe because it wasn't paid on. The other option is a payment plan. Yeah. A payment plan. There are two types of payment plans. If you're able to pay the balance within 3 months, that's great. If not, an official payment plan, you can do up to 3 years, but your balance due needs to be less than $50,000. Anything above that, then there takes a little bit more paperwork to fill out to go into a payment plan.
Yeah. we were talking earlier off camera about some scary interactions with the IRS. When you get one of those letters,
Yes.
or per our conversation, an IRS agent shows up strapped, what do you do?
So just to address the whole IRS agent being strapped, that's more a little bit, they've been trying to get a hold of you and you're not responding, or it had to do with payroll taxes. Payroll taxes is more for a business that has employees, that they're deducting funds from the employee, but they're not sending it off to the IRS. They're keeping them. So if IRS kind of gets wind of that, that's the scenario you would probably see an IRS agent at your door. But if you do happen to get a letter from IRS, I know they're scary and it makes everybody panic, but the most important thing is to stay calm, read the letter, see what it is they're asking. If you do have a tax preparer, get that letter to them ASAP. I'm sure they've seen something like this before and they will be able to help you either answer or they'll just ask some verification of some kind of form that they're asking. IRS will send about 3 to 4 letters letting you know there's a problem before they start sending, actually doing something. Needless to say, the second letter does seem even scarier than the one before. They're starting to threaten, but it's just unfortunately their tactic.
Yeah.
But again, don't see the letter and put it away. Please open it, read it, see what they're asking for. And if you really don't know how to respond to it, seek a tax professional. They'll look at the letter. They'll probably want to look at the return as to what's being questioned, and then offer you options as far to how to solve it.
And let's say it goes so far as to get audited. What does that mean? What does getting audited mean?
Audited. There's different levels to getting audited, and unfortunately, if you do get a letter where they're trying to correct something on your tax return, it's an audit. It's not the room and table kind of audit, but it is an audit. In that scenario, again, if you're able to provide them with documentation they're wanting, they just want to see that the numbers are correct. Usually, if you don't agree with the changes and and you're going back and forth, they might request to see you. And you can go down and they'll set up the time. At that time, you just need to bring in the
Clear your calendar.
Yep, bring in the documentation that they want to see to prove that you do deserve that deduction or whatever it is that they're questioning. But usually for them to want to see you, it's more on the business side. It's on the business side, but they've already tried to get it cleared first.
Yeah, they probably have a reason, is
Yep.
what I'm hearing.
And on that note, IRS only communicates via letter.
Snail mail.
Yes. I know in our in this day and age with technology, emails and all, you would think they would communicate via email. They're not there yet. So there is a lot of scams via email that's saying IRS is trying to get a hold of you, or even calling you. Those are definitely scams. IRS does not call you out of the blue. If they're calling you, it's because you've already been in contact with them via mail. They just don't call you out of the blue and say, hey, you have a tax bill of 20 grand, pay it. No, those are scams, definitely scams.
So watch out for those.
Watch out for those. So you'll always get a letter first.
Very nice. Good information. I think we've all probably picked up the phone to a threatening IRS
Correct.
agent.
Mm-hmm.
All right, switching topics a little bit into tax preparation and record keeping. What should freelancers in particular be doing throughout the year to stay ready for tax season?
Definitely saving receipts. I know it's an old school kind of way of thinking, but it's still saving receipts. What I tell my clients is I don't need to see them. You don't need to prove them to me. But in an audit, push comes to shove, if IRS wants to prove that you did spend that amount of money on advertising, we need to be able to provide them those receipts. Good habits when you're going to start a business is setting up a checking account just for your business. So anytime you get paid,
Don't meddle personal funds.
yes, definitely. If you are thinking seriously of going out on your own, like this is something you want to start doing, open a checking account, even if you haven't filed for the LLC yet and made it official. Like this is something you're thinking, you want to test the waters, open a business or open a separate checking account. And anytime you get paid, put the money in there. Anytime you have to pay for any expense of the business, it comes out of that account.
And why is that so important?
Couple of reasons. The first one's like you mentioned, you don't want to mingle your business and your personal account. Again, you're starting with good habits, because when you do make it official and you do register that LLC, you want to keep the LLC separated from your personal. Anytime IRS sees that you are commingling personal funds, that gives them the door to look into your personal life, when in reality, all they're trying to look at is your business.
Yeah,
Okay?
goes back to Ted's bubbles and lines.
Yes, bubbles and lines. The other reason is it makes it so much easier at tax time. You're only looking at one checking account, and you're only looking at one credit card for the income and expenses. And it makes it just easier to collect that data. And then second, and lastly, again, it's just a good habit, because if you go on your own and you are very successful, as if I'm going to use me, as I'm working with you, there's going to be some changes that need to be done, that you need to have that business account.
Yeah. At the end of the year, Josh and I have to sit down and allocate all of our receipts from our purchases to our QuickBooks profit and loss, and then we send it to you, and we're
Yep.
like, make sure we didn't screw it up.
Correct.
And that is a daunting task.
It is.
Especially if you're sitting down and you're doing the whole year all at one time. But why is that so important? Why is having all of those expenses and deductions, why is that so important?
It's so important because, again, you want to be able to see the numbers. You want to know how much you're making and how much is going out. For tax purposes, it helps me better advise you if I can understand what the numbers look like. There are benchmarks of profit, meaning after all your expenses, the money that is yours, that I need to know in order to better assist you and advise you for tax purposes. Being self-employed, as I said earlier, it can be expensive in tax-wise. So there's a benchmark that if you're an individual owner of the business, once you're profiting about 50 to 60,000, I like to say I'm going to plant the seed of becoming an S corp. But if you are profiting 65, 70,000, there's no question we're going to move you to S corp, because the liability for that amount of profit, it's very expensive. We're talking 15% just for self-employment tax, and then we're adding on another 12% your income tax rate. And when you become an S corp, you will only pay the income tax bracket. The Social Security doesn't go away, but it's just a little bit cheaper. It lowers the tax bill there.
Uncle Sam wants their money.
Yeah, and the other reason, and I think this is where I can kind of bring you back a little bit into, you want to know how good your business is doing. Yeah. You want to know if your business does well during the holidays and it's slow in the summer. You want to know if you're profiting enough to actually make a living of this business. A lot of my small business owners that I work with started off as a hobby. And it just slowly over the years, I've seen that hobby turn into a small business. And if you don't know those numbers, you're gonna get burnt out, because then you don't know when it's time to pull the trigger to say goodbye to your 9 to 5 and put all your energy into your business.
Absolutely, yeah. Sometimes a difficult transition.
And it is a difficult transition, yes.
Yeah, absolutely. And we're talking about receipts. So what are some of the common tax deductions that might often get missed?
Usually the big one I think everybody really shortchanges themselves is mileage. Mileage is very important. It's one that I'll just do this, but when you really sit down and track your miles and look at and take it as a deduction, it's really, really beneficial. What that means, or how can I take that as a deduction? First thing, if you work for yourself, you need to establish a home office at home. Designate an area, a desk that is your home office, where you answer phones, you send emails, create your invoicing. So that gives you a starting point. So as soon as you leave your home to go to any job, that mileage is now deductible. So if you go from job to job to job and drive home, that whole day, that mileage is going to be reducing your income, meaning it reduces your profit.
Okay. Now, what that doesn't mean is if you are a W-2 employee but moonlighting as a 1099, You can't just deduct all your mileage.
No, you don't. Unfortunately, in that particular scenario, as soon as you get to your moonlighting job, if you drive to another location from that point, that's when the mileage begins. And then the drive home, that's unfortunately not deductible.
Yeah, absolutely. Is there a best practice on how to track expenses and income throughout the year?
Yes, like I said, starting with really good habits, that checking account. Opening that checking account that is exclusive for business income and expenses. You can even do a credit card because, you know, in the beginning you might not have the cash flow. So if you designate a checking account and a credit card for that, that would be best practice. That's usually when somebody sits in front of me and tells me they've done that, that makes me happy because now I know we're only looking at one account. If that's not possible right off the bat, if you're still trying to figure it out, there are income templates that you can fill out. You know, it tracks your income and you can enter your expenses to kind of see where you're at. And then as you're going and getting bigger, you want to get something a little bit more sophisticated as an accounting software. At our office, we use QuickBooks Online, and that generates a profit and loss and the balance sheet, which is two reports that are financial statements that are needed in the business world.
Yeah, QuickBooks was a big, scary transition for us at the studio, and you guys guided us through that with precision.
Thank you.
So thank you for that.
Of course.
Should creative freelancers hire a tax professional, and if so, when?
Yes. I think mainly you should talk to a tax professional if you're really considering to go out on your own, especially in the beginning. I like it when a client kind of just hints that they're trying to start a business because unfortunately I do overload them with information, but I make it very clear.
Guilty.
I make it really clear what benchmarks to come back and talk to me because in the beginning you don't need me 100% of the time. You just need to understand, okay, if I'm profiting about 30 to 40,000, I need to go see my tax preparer because then they can let you know what your tax bill is going to be and you can be prepared for it. That way it doesn't catch you for surprise come tax day. And then the next benchmark, if you're making, 50 to 60, we're going to start talking about the S Corp. And then again, managing the tax liability. So as your profit is growing, you're gonna build a relationship not only with the tax preparer, but eventually with the bookkeeper as well.
Yeah, there's nothing worse than sitting down in April and seeing you owe $3,000 if you're an employee. It gets only worse from there as you're an independent contractor.
Correct.
You may be owing tens of thousands, depending on your income and your profit.
Correct.
So, what is the risk of just waiting until April to deal with your taxes?
The big tax liability. That sticker shock, the sticker shock of owing all this money and not understanding why. And especially, we try our very best to explain the tax return to our clients because you do have to switch your mentality. You're going from a W-2, which your paper really tells you how much you earned, how much was taken, and if filled out correctly, should be enough to cover the tax liability. And everybody looks at the bottom line, whether I'm owing or whether I'm getting a refund. But when you're self-employed and working for yourself, I start deprogramming you to stop looking at that bottom line. You have to look at what your tax liability is, which is a couple of lines above that bottom line.
Yep.
That's the important. That's what you need to be looking at because that's how much you owe and that's how much we need to make sure we're sending in to the IRS to cover that liability. But if you wait until April during the height of tax season, we will do our best to prepare the tax return, and explain it to you. But the sticker shock of that balance due, it's hard to get over. It takes a moment. It takes a moment to understand. And even though it's hard to hear, but if you really change your perspective, if you have a tax liability and if you owe, it's not necessarily a bad thing. That just means your company's you did better than what you thought you were gonna do. Now let's put something in play as far as tax planning. Come see me in the summer. Let's see what your numbers look like. Let's see where you're going. But the biggest fault is that on top of the balance due, the other risk, the penalties and the interest. If you don't have that kind of money to pay by April 15th and you have to pay it throughout the year, or you're going to pay more than what your original balance was. So now you're giving away more money that you didn't want to give away. So that's a really big one. It's the balance due and the penalties and interest.
Yeah, and for employees, I think that there's sort of a mentality in the US about getting a tax return is a good thing.
Yes.
And that may not always be the case.
Well, I leave that as a personal preference to my clients, because
Sure.
it just depends who you're talking to. On a personal level, no, it's not. If as an employee, if you're single and you're getting a refund, that just means you're getting your own money back. We all have a friend that is married and have kids, 2 or 3 kids, and you hear them, oh, we got a $5,000, $6,000 refund. 99% of the time, that is not their money that they're getting back. It's money that they're getting because of the credits of the kiddos. Yep. And unfortunately, we kind of get sucked, the single people kind of get sucked into that and want to get that kind of a refund. And I always tell my single clients, well, I'm not recommending you have kids because they're expensive.
Yeah.
I go, but that's the reason why. But yeah. In your case, if you are okay with giving the government a little bit more of your paycheck and then getting a lump sum at tax time, that's fine. But then you have others that are like, no, I want to see that on my paycheck. I have bills to pay, or I want to go on vacation during the year. Yeah. Okay, let's make the adjustments so it's not so big of a refund and it's more on your paycheck. In an idealistic world, our tax return would be 0. Yeah. When we file, it should be 0. A little bit of a warning, the IRS did change the W-4 forms a couple of years ago to where it calculates your withholding to be enough to where if you file your return single, it breaks even. Not 0, but you either get a very small refund or you owe a very small balance due, which you think, well, that's great. Yes and no, because I've seen that if people are not paying attention to what's being withheld, I've had people that have gotten decent refunds back owe money because they didn't revise their W-4.
Yeah, and my husband is a financial guru. You guys can walk miles on me, but I think one of the concepts that we have that I usually try to tell my students is that if you are getting a tax refund, you're giving money to the government that they're not using, but that they're making interest on.
Correct.
And if you flip that script, you could be keeping that money, and if you save it, you could be getting interest on it.
Correct.
Put it in a high yield savings account, put it in a tax-free retirement plan, whatever works for your situation, you could be benefiting from that money versus the government.
Correct. And like I said, I do give my clients that spiel.
Yep. I
do educate them on that factor, especially if I can, because a tax preparer is going to be able to tell you if it's your money or if it's the refund is coming from a credit. So we're talking about a refund that's your money. Yeah. So tax preparer will be able to tell you that. So in that particular case, I do educate my clients, but again, I leave that on a personal preference. Some people just prefer to get that
peace of mind.
They know that, hey, I'm getting a refund on April, I can go on vacation in May. There's other ways to save,
sure.
But I don't get involved in that. And I'm like,
those are your books.
Yeah, that's up to you. But I do take the opportunity to educate and say, okay, this is your money. Are you okay with this? Paying in this much and getting it at the end. If they say yes, I leave it alone. If they say no, I'm like, okay, well, this is what we can do, an adjustment. And I also do it the other way around, because who likes to owe?
Right. Who
likes to owe? So obviously that's an automatic. If it's a balance due, okay, what are we doing wrong? Who's not having enough withheld? Or it happens.
Making more money this year.
Or made more money, or you switch jobs, or a spouse started working and didn't think that she's earning $30,000 and didn't think it was going to affect the tax return. Yep. So there's a lot of variables. So a good tax preparer would be able to explain why you owe.
Yeah, I think it's important to ask questions.
Yes, definitely.
We certainly come through and litter a few every year.
Yeah.
Speaking of evaluating your income, how often should you evaluate your current income and the taxes that you've paid out of your paycheck, or if you're paying quarterly taxes as a 1099, how often should you be evaluating your income to ensure that you're meeting those tax brackets or those tax codes.
It's easier on the W-2 side as an employee because usually I would recommend when you get a bonus, or if you get a raise that's significant, you really want to look at that and reevaluate and make sure that you're on track. The withholding side is percentage based, so as you earn more income, more is withheld to cover it. I do have a couple of clients that they get a really nice bonus throughout the year and they like to go exempt, meaning that no federal or state withholding is paid in. That doesn't save you at tax time. The only thing is really what it comes down to, either you pay it when you get it on your check or you're going to pay it when you file your taxes. It doesn't exempt, just because you marked it exempt, it does not exempt your bonus from paying taxes.
You are not exempt from taxes.
No,
The government wants their piece.
Yeah, they will. So if you happen to overpay in that bonus, then you'll get it in your tax return. So for employees, that's what I would recommend. Or when you get married, because you don't know how much income the other person is bringing into it. You don't know if it's going to take you to a different tax bracket, so whatever withholding you have currently may not be enough. As a self-employed, it's a little bit more difficult. Again, this is where knowing the numbers is very important. For sure, every quarter. Yeah. If you're not looking at them monthly, for sure, at least every quarter. Yeah. And at least consult with the tax preparer once a year. And that's after them preparing your taxes. Yeah. So you would see them when they prepare your taxes, and then maybe sometime in the summer. Especially if you're noticing when you compare your income to the previous year that you're on track to make double or just 20% more, then say, hey, I really need to sit down and review these numbers to make sure that I'm within my tax liability. Because as you said, as self-employed, you're responsible to pay the taxes. Yep. So you have to send it in. You have to know how much you're sending in. And unfortunately, as I said before, IRS is looking how much you're paying in and if it's equivalent to the income that you're reporting. Yeah. They will take whatever you earned all year, divided by 4 by quarter, and see if you paid in enough taxes.
And then just to clarify, the tax preparation time is really any time after January 1st each year, yes, up until the 15th, typically, unless you get an extension.
Unless you get an extension, correct.
Perfect. Let's talk about deductions again for a minute. Sure. You've seen from being in our books at the studio how much some expenses can be in this industry. You buy a new computer, we're surrounded by cameras worth several $1,000s, the studio, a couple $100,000 to millions even.
Correct.
Can you tell us a bit about large purchases? Because yes, sometimes you can't deduct those in one fell swoop.
Correct, that is correct. And there's a couple of variables that you need to take into consideration in order to deduct the full cost of it or depreciate it. Depreciating means that you take a very expensive item and take a deduction over a certain period of the time. That period of time is determined by the lifetime of that equipment. So IRS has designated lifetimes to equipment, to cars, to videos, refrigerators, everything has a lifetime. So those items are taken based on that amount. My rule of thumb is if it's over $2,500, let's look at it. But it's one piece of equipment. So if one camera costs more than $2,500, we're probably going to depreciate it over the lifetime. So you'll be able to take 1/5 of it for over 5 years. Versus if you buy a chair. A chair is $25. Your office chair, $25. Maybe $150 if you're really splurging. Sure. Even though it may have a lifetime longer that unless you buy it all in like a big bulk of it, you can deduct that one that year, done deal. Don't have to worry about it. The other thing is the equipment, even though you have expensed it over depreciation, might have some kind of value when you sell it. Right. So that's also another variable because sometimes a stack of paper that you get for the printer, once you use it, that doesn't have value anymore. Right. It's a done deal. Yep. So that is really the difference between being able to write something off and depreciating something.
Yeah, and I mean, that can get a little bit messy because that's for physical goods. Mm-hmm. But if let's say you run a campaign for a client that costs you out of pocket $5,000, you don't necessarily get to depreciate that. That's a deduction, right?
Correct.
Okay.
Yep. Correct.
So be careful because those physical goods have different approaches to deduction.
There are some items that are not tangible that can be depreciated. And usually it kind of has to go more along the lines of purchasing, and we call it goodwill, like you're buying the name or you bought a client list. It's not, I mean, you can touch the list, but it's not an equipment.
Digital product.
Correct. So there might be some items that are not tangible that can also be depreciated.
Yeah.
But so definitely consult with your tax preparer on that.
Very nice. If I buy it for my business, does that inherently mean that I can deduct it?
When I saw this question, it made me laugh because a lot of people have that concept. Well, I paid it with my business credit card, so it's a deduction. No, it's unfortunately IRS does not see it that way. There is some verbiage that we kind of have to fall back on, and basically as a tax preparer, I have to look at that expense and say, can I defend this in front of the IRS? So usually that verbiage, it has to be ordinary and necessary in your business. Okay, if you're buying, I don't know, Louis
Vuitton bags.
Louis Vuitton bags, but you're a window cleaner. That bag has nothing to do with cleaning windows. In your guys' situation, I mean, if you're buying or renting a Louis bag because you need to do a photo shoot, that's ordinary and necessary. But if you buy it and then turn around and sell it, that gain, if you sell it for more than what you bought it, that's considered a gain. That's now income to the company.
And that's because that product that you purchased is an asset of the company, not a personal
Item.
Let me take this thing home.
Correct.
Very
So just because it was paid through a business account or a business credit card, no, it does not make it deductible. You have to really look, is it necessary, and if it's ordinary, meaning you need it to conduct business.
There's a line from a show called Schitt's Creek.
This is some new bedding.
David, didn't I just tell you to save your money?
Yeah, I am testing this out for the stores, so work is paying for it.
Work is paying for your bedding?
I was gonna leave, but now I don't want to. So.
What is that? Is that a new lamp?
Yeah, I'm thinking of bringing homeware into the store, so that's a write-off.
That's a write-off?
Yeah.
Do you even know what a write-off is?
Yeah, it's when you buy something for your business and the government pays you back for it.
Oh, and who pays for it?
Nobody. You write it off.
Who writes it off?
I don't know. The write-off people. What? Why are we having this conversation?
So if I need booze to get through my day, I can just write that off?
That's a stretch.
But the skincare products you got this morning, those are a write-off.
What skincare products? You purchased skincare products?
Okay. I am the face of the company. If I have acne, what does that say about the legitimacy of the store?
That's not a write-off. That's not a write-off. This? Not a write-off.
Oh, well, the bedding's non-refundable, so...
David, a write-off is a business expense used to reduce your taxable income.
Okay, well then, why isn't it called a tax write-off?
It is! It is! You can't just buy things for yourself and write them off.
Well, then I'll return some things. There's not enough space in here for the massage chair anyway.
I should get back to work, just in case any more of your packages arrive.
So let's ask the question. What's a deduction?
A deduction is something that reduces your income. So when you get paid, that is your gross income. A deduction reduces that income and gives you your profit, meaning money that is the money that you can take for you personally, that's what the company made. So it reduces your gross income, producing your profit.
Which can also have a side effect of potentially reducing your tax liability.
Correct, it does. And let's kind of talk about that a little bit, because there is another big misconception. A deduction reduces your income. It does not reduce your tax liability dollar for dollar.
Right.
Okay? Your
Potential. That was where
Yeah.
I was going with the potentially
with
could.
the potential, correct. So the profit is subject to an income tax rate, which is a percentage. So that percentage gets applied to your profit and gives you your tax liability, what you would owe in taxes. So your deductions doesn't go up against your tax liability, it reduces the profit. Are there credits out there that go up against your tax liability? Yes. And notice that I say credits, because credits, it's what reduces your tax liability. And just to kind of go a step further, there's refundable credits. Refundable credits mean money in your pocket. If it's a credit, it does essentially mean money in your pocket, but not directly. Versus a refundable credit, meaning if you use it or don't use it, it's money in your pocket. A credit, it goes up against your tax liability, but if you don't use it all, you don't get money in your pocket.
We are in the weeds now. Here we
Yes.
go. All right. We talked a little bit about travel miles. Let's also talk about food, travel miles, food. Can those expenses be deducted on my taxes?
Yes, they can, but again, there's rules to it. The rule that IRS has is a meal can be deducted if business is conducted between a business owner and a client in a restaurant. So if we were to go out and have dinner and we were gonna, set up agreement and we're talking about business because I'm thinking about hiring you, that is definitely gonna be a business deduction for you.
Assuming I'm paying.
Assuming you're paying, correct. But let's
I was
say,
always.
but let's say you are out and about, running around, handling items for the business. You got to go here, got to go there. Don't have time to, make lunch at home. I mean, who does? But if you stop and grab lunch for yourself, that is not deductible. That is such a big misconception, and we struggle with that, with everybody thinking, well, I'm working, I'm on the clock. I should. Oh, I agree with you.
Yeah.
I didn't make the rules though.
Yeah.
This is what the rule says. If you're stopping by a fast food joint, or just even stopping at a restaurant and buying food for yourself because it's lunchtime, it is not deductible. A meal does become deductible for yourself if you're traveling. So if you're traveling for business purposes and you go to a restaurant or even stop at a fast food place, then it does become deductible. But it has to be about 50 miles radius away from your home base. So basically what IRS is saying, if you can't go home and make your lunch or can't make it back home for dinner, then that meal is deductible because you're considered traveling.
Yeah. There's I think maybe a few relevant exceptions in our industry. If we're running a big photo shoot or something like that, you're doing business. You gotta feed the people on
catering.
set.
Yes, catering and business meals are two separate things.
Yep.
A business meal is only deducted 50% versus a catering. If you're catering an event, that's deducted 100%.
Yep.
And then that's not considered a business meal.
Yep.
It's considered an office event or just catering.
And something that I learned actually in this last tax year was meals may not be 100% deductible.
No, they
About 50?
They're 50.
Yeah.
There was an exception after COVID, just because they wanted everybody to kind of get back into the restaurants, where it was 100% that year after COVID, but it was only good for 1 year. We're back to 50.
Yep. That was we don't eat out a whole lot, but it was one of those things where it's like, oh, okay, that's interesting. When should and shouldn't someone be charging, particularly freelancers, when should or shouldn't someone be charging sales tax to their clients, and how does sales tax generally work?
Okay, so that's a very good question. Sales taxes is mainly charged if you are selling an item. I'm not very well rehearsed on their services. I know it's under some rentals. I think they're starting to, you are obligated to charge sales taxes on that. But if you're providing a service and
General service,
it's
design service.
correct. There's no sales taxes attached to it. Even though you might give an item to them, you're not selling the item. You're selling the service behind that item. And I'm going to use Ted as kind of like the example. Like a wedding photographer, he is selling the service of taking the pictures, but when they give you the pictures, they're not necessarily selling. Now, if they were selling the pictures, kind of like when you go to Disneyland and you buy the picture,
Yep.
that's
A physical print?
because they're charging you for that particular picture. There wasn't a service behind it. Another industry there's some industries that do have both of them, which is like a mechanic. They provide a service, which is the labor, but they're selling you the parts. So they charge sales taxes on the parts.
Yep.
Okay? That's when you would charge versus not charge.
Yeah.
How does sales tax work? Biggest thing you have to understand is when you charge sales taxes, the client is paying the sales taxes. Those funds need to be sent to the state. Those are not your funds.
You can't put those in your pocket.
No. Those are not your funds. Those are the state funds. You are the in-between person. You are collecting those sales taxes on behalf of the state. So then you are required to file a return, which is a tax privilege return, a TPT.
TPT.
Depending on how much you collect is going to dictate how often you file it. So if you're collecting $1,500 or less throughout the year, you probably only have to do it once a year. But yes, those funds are not yours. The advantage of collecting the sales taxes is when you purchase the material, you can actually be tax exempt, meaning that you don't pay sales taxes when you're buying the material. But that means you have to collect it from the client. There's some businesses that opt not to collect it, and they pay the sales taxes when they buy the material.
Sort of the sales tax is included in the price of the item.
And they include it in price of the item. So as long as the state is getting their piece of the pie, they're fine. But the biggest red flag, the biggest no-no is to put in your invoice, charge the client sales taxes, but you keep it. That is considered stealing. You're stealing from the state.
Tax fraud.
Yes. And if the state finds out, they are not going to be happy.
Yeah. And I think there's also something to be said. Let's say that we had a wonderful designer here earlier. His name is Eric Torres, and he sells little card games and things that he designs himself. If you're selling those online and you're shipping those across state lines, or even sometimes some states might have multiple taxes within different counties and things like that, there are different tax percentages for each of those areas. And if you're selling online, you've got to have that built into your sales formula.
You do need to understand, luckily here in the state of Arizona, and again, I know enough to be in trouble, as I like to say. I know enough to be in trouble, but you really would have to consult somebody that does the sales taxes. But my understanding is if you're selling within Arizona, you have to collect taxes. If it's being sent out, you don't necessarily have to collect it, but you do have to report to the state that you sold out of the state. So in the return itself, it reconciles that information.
Beautiful.
But you don't necessarily have to go and get a license for each city, each county across the United States.
Unless you have a physical presence in that city or county.
Correct.
Yeah. Otherwise, you can get your TPT tax license for, we'll say, Arizona. You can sell that, report those taxes for other sales with out-of-state purchases, and they'll do the rest.
Yep.
Rare occurrence in the tax world where the tax entity does the rest.
Right.
Awesome. All right, let's talk about some accounting and budgeting basics. Sort of get back to home a little bit. What is the difference between gross income, net income, and cash flow, and why does it sort of matter that our students know these terms?
It's very important to understand your gross income, net income, and cash flow because, again, you're looking at the numbers and you need to understand what's coming in and going out. Gross income, it's just the amount of money that came in. Your sales, your total sales. This is before any expenses, any deductions. How much money did you bring in, gross? The net sales is what, minusing all your expenses. We're not counting deductions on the tax return just yet. We're talking about money that physically left your account as an expense to the company. That is your net sales. Cash flow, that explains how much money you're bringing in versus money going out during a certain period of time. Because if too much money is going out versus money coming in, you have cash flow problems, meaning you're spending more money than you're bringing in. So that means you're probably getting in debt, or that credit card balance is getting a little bit too high for comfort. So it's important to understand those.
Any other terms that we should cover while we're here?
The two really kind of planting the seed would be the profit and loss, which is a report that tells you how much money came in, how much money go out, and it will tell you your gross sales and your net income. And the other one is the balance sheet. The balance sheet tells you the value of the company based on how much money is in your account, how many assets you have, how much money you owe to other people in loans, and then as an owner, how much money you've either invested or taken out.
Yeah. And for the record, too, sometimes you might hear profit and loss as P&L.
Correct.
And then the balance sheet just tells you how many Louis Vuitton bags you have, right?
Correct.
What financial systems or tools, we talked a little bit about QuickBooks, but maybe some others, what financial systems or tools do you recommend for creatives who are just getting started?
If you're very good with, if you're just getting started and if you're good with Excel, that would definitely help.
We run a lot of those labs in this class.
That would definitely help, but as you're growing, you want to evolve into an accounting software. Like I said, we at Arete, we use QuickBooks Online. It gives us the access, but it also gives our client the remote access from anywhere. So they can jump in, log in, and look at the numbers and see what it's going, or I can do the same if the client does their own books. So those would be definitely the ones.
So when you email your accountant at dark30 and you're like, how do I classify this purchase?
Yeah. And the other one too as well, if you're getting to track your miles, that's the biggest thing. People don't like tracking their miles. Having some kind of app that allows you to track your mileage is also a big help at the end of the year.
Absolutely. QuickBooks has a
It does.
tool for that.
It
Okay.
does. Mm-hmm.
QuickBooks is great. We spent a lot of time rejecting QuickBooks until I think Beverlyn finally shaped us up, and it seems scary at first, but
it is.
this
Well,
is
again,
no ad for QuickBooks, but
just don't, like I said, for anybody that's creative, I get it. It's a scary concept. Like
you don't want to look at the numbers
You don't
all
want
day.
to look at the numbers. I get it. I understand.
Leave that to Beverlyn.
Yes, I'll take it. I like looking at the numbers. You
Yeah.
want to hire somebody like me that likes looking at the numbers, because
Yes.
then we work as a team.
Yes, and definitely someone you trust too.
Definitely.
I think that's a big note. There was a commercial once where it was like, your accountant might be on a yacht. And you want to trust that person that they're not.
And it's kind of like the comment I said earlier. You don't have to be the one adding, you don't have to be the one putting the data into the system, but make time at least once a month to look at the numbers and understand where the money is going. Because you may trust the accountant, but you know your business. I've had clients come to me and say, this number doesn't make sense to me. And I'm like, okay, why doesn't it not? And they tell me, well, this, and this. And I dig in a little bit and I say, well, this is what's happening. They're like, okay. And I'm like, this is why that number is like this. Okay, let me make this adjustment.
Or $20,000 in the hole.
Correct. Because I also trust the owner's intuition, because they know their business. You're working your business every day, so you know what's going in, going out. You have an idea what the numbers should look like, so don't be scared to look at them.
Yeah, absolutely. Stepping away from the business for a moment, just personally, what are some good habits to build now for long-term financial health, savings, retirement, emergency funds? All of that stuff is great. What do students need to be focused on building now for their financial futures?
Being very disciplined with their money, and understanding the difference between the company's money and your personal funds. The biggest misconception or mistake I see small owners do is yes, the business is yours, you are the business, and those essentially, you are paying taxes on that money, but it's not 100% yours. A big chunk of it is, but not all of it. So being very disciplined with the money, understanding how much you need to take home and pay the bills at home, and how much has to stay in the business in order for the business to continue to function. And also being able to consider retirement kind of like an expense. If you see it as an expense, then you're building that future for you you're building that future for you.
Yeah.
but definitely being
Payroll.
and correct. And then the other thing is be careful with your lifestyle. Just because the business is doing great
Doesn't mean you are.
doesn't mean you have to go, because I think that puts you in that rat wheel. Even if you're a W-2 employee or if you're a small business owner, just be careful with that extra cushion. Everybody, I mean, I think we've all been guilty of it at one point or another in our lifetime, that we get that extra bump in our check, or the business is doing very well and we tend to upgrade our lifestyle. Before doing that, make sure that your future is taken care of. Make sure that your savings, your emergencies are set in place. Once those are completely funded, then you can, and the company can afford it, then yeah, for sure. Then go ahead and start making those upgrades.
Yeah, I think money has a tendency to burn holes in some people's pockets. And you mentioned the rat wheel. It can be hard sometimes to get off that rat wheel when it's spinning so fast. So I think that's a great analogy there. If someone's living invoice to invoice or paycheck to paycheck, how should they plan for, we say feast or famine in this industry, because you can be making a bunch of money one moment and absolutely nothing the next month. So how can people plan for some of those unexpected slow periods or expenses?
As far as W-2, it's really hard to plan with ahead of time if you're living paycheck to paycheck. Unfortunately, the only answer to that would be trying to find another source of income to help you kind of get out of the paycheck to paycheck. The invoice side, I like how you say invoice to invoice. Like you said, some months you're doing great, some months you're doing not so great. And sometimes you can have really good years, and then some years you just kind of, it comes down. Backside. And again, it kind of goes back to the previous answer. Just understanding how much you need to survive, to pay the bills at home, and making sure you have that fund put away. So when unfortunately that time does come where you're like invoice to invoice, you have those funds to step in. A lot of companies, small business owners, not necessarily solo, but anybody that has employees, they like to have about 3 months reserves of payroll in their savings account if something were to happen. So you kind of have to see it that way. You have to kind of say, okay, I need this amount of money for the business to continue for 3 months, and I need this amount of money for me to live 6 months and not freak out because there's no money coming in.
When you start dipping into that, it's time to start talking about layoffs.
Correct. So I think that's the biggest thing. Again, it's awesome. And the other thing that helps with that is, again, the tax planning. Tax planning is such a big tool, and I think it's going to be more known. But I cannot stress enough, tax planning, anybody that's starting off, because you can get in debt so quickly with your taxes. And it takes about, I would say, a solid 2 years to kind of come out of it, because when unfortunately you have that tax bill, not only are you paying the taxes behind you, you're paying the taxes for that year, and then you're also paying the taxes for the future. So, and that's a lot. It can be a lot for a small business or an owner, and be like, well, then what am I doing? And it's very disheartening to see them. But I'm like, trust the process. We're gonna get you here, and if they stick with the discipline of, okay, we're going to pay this, and out we go, once they start making profitable, if they learn from that mistake, they will put that money away, so that way when something does happen and it dips, they have that money reserved.
Yeah, sometimes I ask myself the question if the process knows we're trusting it. And then not only that, but you mentioned about the government, right? They are not light-footed about getting their payments. They will garnish your wages. They will do whatever they need in order to get their cut. And like you said, that can be a difficult hole to pull yourself out of. Switching topics yet again, we're getting close to the end. Thanks for sticking with me here. Billing and client payment practices sometimes are the scary conversations, but they're conversations that need to be had.
Very important to have.
What should be included on a proper invoice?
The date the invoice was created, the date that you are expecting payment to be received, a description of the service, the quantity, the price, And again, if you're going to be collecting sales taxes or not collecting sales taxes, and any disclosure of what your process is if you don't receive the payment on time.
So safe to assume I can write all that on a napkin, right?
Not necessarily, I mean, yes and no, but I would prefer a formal invoice for it to have a little bit more of a standing.
That was a little bit leading, but yes.
To be a little bit more standing in if you want to fight for the payment.
Yeah, okay. What?
Not to mention that it's more professional to have the invoice.
Sure, yeah, run that through the court, your paper napkin. This one is a little bit specific to certain industries, but what is the difference between net 30, net 60, net 90, all of that kind of stuff? And how do you protect yourself when clients sort of delay payment?
So the net 30, the net 60, net 90, it just means how far from the moment you create your invoice, the time frame they have to pay you. So it's either 30 days, the 60 days, or the 90 days, which again is very scary. Unfortunately, if the client is delaying the payment, best practice is to stop the services until you get what a payment was agreed for the first portion of it. If they continue not to send payment, unfortunately, like Ted said, either you look at it and say, is it worth my time or is it not worth my time? And you just kind of unfortunately have to let it go.
Yeah, and Ted also mentioned about getting upfront payment.
Yes.
That's not always an option in our industry. Sometimes we have really large invoices. I sent one out the other day for a couple $1,000s that if you're working with other small businesses, that might be difficult for them to choke down all at once. So sometimes breaking up those payments is what's needed.
Or a progress of the work in your contract. You can say if we get to phase 1, phase 2, phase 3, and expect a certain amount of percentage of the end of the balance. For those create contacts that you're actually gonna do and need material, you can also charge or ask for a deposit that at least covers that material, because at least that expense is covered if you don't get full payment. Because if your time is the one that doesn't get compensated, well, it sucks that you lost that time, but you're not physically you're not out money when you buy materials. So that would be one, if you can at least ask for the deposit to cover the material. And then the next phase may be approval of the item and getting full payment at the time that you turn in your item.
Yeah, and a practice at our studio is that if we're not able to get payment up front, we at the very least demand a 50% deposit, and that is a normal practice. At the very least, if we need to negotiate, we'll take a 30%, but those are normal terms, and it's appropriate to ask your client for upfront payment and sort of negotiate that. And then I want to go back a little bit. We even have clients that work on, like, we send out invoices on net 30. Is that a bad thing?
Not necessarily a bad thing. One thing I haven't really touched on is the difference on accounting. So this is I'm unfortunately talk more numbers here and a little bit not fun stuff. But there's 2 ways of tracking your income: cash or accrual. What does that mean? It means is how you're going to pay your taxes on. Cash means if you get paid, you provide a service, like a restaurant provides a service right then and there, and you pay right then and there. That's a cash accounting. You pay taxes on what you receive in cash. When you're talking invoices, you're talking accrual, meaning that whether you get paid on that invoice or not, you're gonna pay taxes on that invoice amount. And then that's where you hear the term writing off invoices. So when you don't get paid, you write off an invoice.
Client ghosts you.
Yep. And
out.
in your books, you said, okay, well, my sales was 10,000, but my client's not going to pay me 2,000. Well, if you don't write off that invoice, you're paying taxes on that 10,000, or it's considered income until you officially write off that invoice. Versus cash, there is no writing off invoices, because whatever hits your checking account, that is what you're reporting as income and then consequently paying taxes on.
And writing off that invoice doesn't mean going into QuickBooks and hitting delete.
No, no, not necessarily, because there might have been a partial payment to it. There might have, and you still have
or
to. Or
even no payment, but you still did the work.
Correct, and you want to show that, hey, I didn't get paid on this one.
Yep, yeah. and it keeps your books tight so that if, for whatever reason, the economics work out, as Ted was saying, and you do have to go and collect,
see.
you
Yeah,
have
correct.
it there. What should students know about late fees, payment terms, collections from the accounting perspective?
From the accounting perspective, again, late fees are, all of those are considered income to you. It's not a compensation that you didn't get because the work wasn't completed. It's still income to you.
Taxable income.
And taxable income as well. Whether they're collected or not, again, that's a whole nother question. So you have to keep an eye on that as well. You want to feel secure that if you put that out there that the client would not want to pay an additional $35 because it's late, but it doesn't work out that way sometimes.
Yeah.
Or sometimes the client doesn't care and they'll just pay late and pay the fee,
Yeah.
which would be the best case scenario. Stressful for the business owner, but best case scenario. But it is still considered income to you.
Yeah, and I mean, in our contract for the studio, we have late fees built in there. It's more of a threat than a promise, but at the end of the day, we've ran the studio for several years and had several late payments and never once charged them. So that's
Right.
that's a good bargaining chip
It
to
is.
say like,
It's more of a bargaining chip and kind of say, hey, but you just kind of have to take it by each case scenario if you can.
Yeah, very nice. What's the risk of delivering a final file, the work that you've done before you've received full payment?
Not getting paid. Not getting paid and seeing your work just walk out and not getting any compensation for it. And again, if you are invoicing, you are able to write that off. But if you are on a cash basis, the only thing that you get to write off is the material that it took to create the item or the item you were selling. But if it was just a service, there's really nothing you can do.
Yeah.
But the risk is just not getting paid. Simple.
Yeah, I like to use the analogy that doing that is like going to the grocery store and walking out, but the cashier comes out after you've put the groceries in your car and says, hi, we need $200.
Correct.
And that's not a fun situation to be in, and it feels a little awkward.
It does. And that's why it's very important to have that hard conversation in the beginning when you're establishing the services that you are willing to provide and what you are expecting to get paid.
Yeah, and I mean, we had this question with Ted, but I'll ask you too. What would you do to the client that just says, oh, you can trust us?
It's really, with Ted, is a lawyer and he has more legal and ethic that he needs to abide by. With tax preparation and accounting, it depends on the client. It really does depend on the client. We're here to help clients have successful businesses. As Ted said, if they're succeeding, we're succeeding. I want you to be able to outgrow us if that, because that would be best case scenario. So it really depends on the client. But if it's somebody that they are just not willing to work with us, they're just not showing any kind of faith in it, it's a done deal. Okay, we helped you, you didn't appreciate the service, and for whatever reason, we respect it, but we'll just walk away from it. But there's other, you'll get to know your clients, and that's, again, as Ted was saying, you build that relationship, and as a small business owners, usually those relationships are the ones that kind of get you through the day when it's hard being a business owner.
Yeah, there's a quick story. I had this photo shoot opportunity that came up. It was a call, same day. Hey, we're in over our head. We need you to come in. We're doing a photo shoot for 2 days. Make some money. Cool, I'll be right there. We had no time to draft an invoice. We had about enough time to say, it's going to cost about this much. Cool, see you there. Contract not sent, payment not made, but I had worked with that person for 10 years.
Yeah.
I knew what they worked with. I knew how they worked. I knew I was going to get paid. I had gotten paid from them previously. Those are situations where you might need to say, screw the contract. let's go make money.
Well,
in the
eventually,
moment.
yeah. Don't tell Ted that.
Yeah, we'll get there, but
Yes.
make hay while the sun is shining. right?
Yeah, and I would like to say that being a business owner is very black and white. It's not. There's a lot of gray.
Yeah.
There's a lot of gray, and you need to really evaluate and look at the situation and be very objective about it. And at the same time, really tap into whatever experiences you've had in the past.
Yeah.
Because if not, that's going to be an experience you learn from.
That experience is huge.
Yep. And again, even if the client did you wrong, doesn't pay you, the experience that you walk away with it is priceless. So, not the
You
way
learned something.
not the way you wanted to, but yeah, at least you learned something. And you
Absolutely.
have to stay positive that way.
Absolutely. Let's carry on that conversation. How should someone follow up if a client hasn't paid on time?
Definitely calls, and the other thing would be email.
Yeah.
Just because you want to have some kind of documentation that you were trying to get in contact with them. And if that doesn't work, I mean, you can do mail, just again, the documentation, because you're showing an effort that you're trying to reach out and say, hey, you know, you still owe us this money.
Yeah. Oddly enough, that same client that I just went on a whim, we went 30 days without getting paid. So I had to call the person and be like, hey,
Yeah.
what's happening? And they were like, what do you mean you haven't gotten paid? I've sent them the invoice a bunch of times. 9 times out of 10, it's not that they didn't want to pay you.
Right.
Sometimes it just gets lost in the shuffle.
Correct.
There's accounting departments. There's people that are supposed to pay you with their company card.
Correct. And just, and you give them the benefit of the doubt until they prove you else.
Yeah.
Until they prove you wrong.
not
Unless
always
correct.
negligence.
Correct. It's not always the negative narrative that, oh, they don't want to pay me now.
Yeah.
No, something might have happened. Give them the benefit of the doubt. So yes. And again, is it in their nature? Have they done this before? Or is this really odd? Maybe something did happen.
Yeah. If the client ghosts you, maybe have different
Yeah.
conversation.
Correct.
What do you think is the best method to sort of a loaded question, but what do you think is the best method to find your rate as a designer? What are you worth?
That is yes, it is a very loaded question because it really depends in the area that you're working, the service that you're provided, how exquisite or how general your service is. So it doesn't hurt to look around to see what other people are offering and what services is included in their pricing. But really understand your service, your worth, and if it's better or more generic, just have that understanding.
Yeah.
But definitely, it doesn't hurt to look around, understand your clientele, and understand where you're working out of.
We like to say what the market will bear.
Correct.
Awesome. Okay. All right. I've held you hostage for quite a while now. 2 more questions,
No
and then I
worries.
think we're good. What would you tell a student who might be looking to go into freelance work?
I would say I'm in awe of them if they go into what they're passionate about, but you are going to be wearing a lot of hats the beginning of the year, not to be discouraged, to really surround yourself, like Ted said, with those professionals that can help you get you to the next step.
Yeah.
Because it's hard to do it on your own, but when you have the right team surrounding you, you're going to be able to focus more on your passion instead of the numbers, instead of the insurance, or instead of the legal side of it. You're going into business for yourself to do what you love or you're passionate about. Let people that are passionate about numbers do that for you.
Yeah.
Because the amount of time you spent doing what you're good at, you'll make up for paying somebody to do what they're good at. And because for you to sit down and do numbers, that's going to take so much time, be so frustrating, so stressful.
Away from the work that you could be doing.
Exactly. And what happens is it doesn't get done. And it gets done 2 years down the road, and now you have this big mess, and you have a business that you want to be running, not dealing with numbers.
Yeah.
So definitely surround yourself with the right team of professionals.
And I think it can be really easy to go and consult with one of those professionals and see their fee and look at that bottom line and say, that's a lot of money. I don't know that I can afford that. But at the same time, what's the cost of not doing it?
Correct. And shop around.
Yeah.
Don't be scared to shop around. I think that's one of the things that why Arete is so successful, because to a certain level, we're there to help you. We're really there because if you're very
Helped us a lot.
yes, because and I've seen it year over year that if somebody can make a living of doing, I had a couple, older couple, that started their business in, I want to say their 60s, making the gates for the houses, and that's all they wanted to do.
Yeah.
That's all they wanted to do. But they would come to us, they came to us very early on, and we sat down and had the conversations. I gave them their tiers to come and talk to me, and every time they would hit that tier, they would come and check with me, and I'd be like, okay, yes, we need to make this move. And the fact that we were able to take that load off of them and them just focus on their craft, it's really satisfying to me, for me to take that off, and it will be for anybody. Other good advice I heard once, and which I take really at heart, is usually a professional that really wants to help you teaches you. I think I gave you this comment early on where I said, I think I might be over-educating you where you won't need me anymore. But to me, it's satisfying because I know you're aware of what can come your way, and you also trust that I'm very transparent, and I'm doing it for the good of the business.
We'll always need you because I don't want to be in the books.
Correct.
So that's
So
we'll be good.
definitely find somebody that you feel that is working with you and not just telling you to do things just to do them.
Yeah, absolutely. And last question here. When would you hope that a freelancer would convert that work? Your answer might be a little bit different than Ted's.
Okay.
But convert from a 1099, maybe operating without an LLC, into an LLC and then eventually into an S Corp. Tell us about those tiers you mentioned.
Yes, I'm glad that you brought that up because yes, I'm not legal. I'm a tax preparer or accounting, so I'm looking more at your tax liability. If you start freelancing and you're getting 1099 without the LLC, that means that your Social Security is on that 1099, okay? I'm still gonna report your income, your expenses, and your tax liability is still gonna be the same whether you're reporting under your social or you're reporting it under the LLC. It gets taxed the same. The LLC is there for your protection. That's the legal department. That's Ted, and he would definitely want you. I would always encourage, if I see the business is doing very well and you're telling me that you're gonna do very well, I will encourage you, please go get an LLC because I'm gonna need it down the road. And one, and two, because of the legal protection. But for tax purposes, if you are kind of dabbling in a hobby and you kind of want to see how it goes and they want to 1099 you, it's okay if you give them your name and your Social Security. That's what goes on the 1099. If a year later you're doing great and you're like, guess what, Verv, I think I want to, do the business. Okay, let's get you an LLC. What that does, it gets registered in Arizona. The EIN replaces your social. So now it's creating that separation between the business and yourself. But
Bubbles and lines.
yeah, but tax purposes, you are the business is you. You're still the same. You're only filing one tax return. So a small business, a 1099 gets filed on a Schedule C, okay? Let's say third year, you're doing great and you're like, guess what, my gross sales is 100,000, I think I'm gonna profit 60,000. Then I'm gonna start having a conversation. Okay, we need to transfer you over and convert you into an S Corp. Please, not to be confused as a corporation.
Sometimes C Corp.
Yes, a corporation is a C Corp that does change your filing status at a state level. That's when you start seeing companies with the Inc. after it, the INC dot. That's a corporation that gets filed as a C Corp. Usually a C Corp is for a company that's gonna make multi-millions right off the bat, or you have multiple partners.
Investors.
Yes, investors, or you have partners that are from other countries. But normally anybody in the audience is probably gonna be an LLC.
Yeah.
Okay, so when we convert you to an S Corp, it's the way you're being taxed. You're no longer being taxed as self-employed. Now you're gonna be taxed as a small corporation, which is beneficial in the sense that your profit is now only gonna be subject to the income tax rate, not that 15% self-employment tax, which is your Social Security and Medicare. But like I said, we have a saying, IRS giveth, IRS taketh away. Yes, you're not paying Social Security on the profit, but IRS still wants you to pay into Social Security. And the only way you do that as an S Corp is through payroll.
Yeah.
So now we have to set you up with payroll where you're paying into Social Security. You're treated as an employee of your own company, even though you're the owner.
To pay.
Yes. Even though you're the owner, you are now an employee of your company. So your W-2 wages is an expense to the company. And then that opens a whole nother door of investments and savings there. But at that point, when you become an S Corp, you're filing 2 tax returns now. One for the company and one for your personal, because now you officially separated yourself from the company. The company is its own entity and you're your own entity.
So does that mean you're a W-2?
Yeah, you're back to being W-2, but you're also the boss.
Yep.
You're also the boss.
But you would give your clients a W-9 so that they can fill that out with all their tax information so that your business can get paid.
Correct.
That's another conversation.
Correct. But that's essentially the difference. So the LLC follows you because that's you're legally registered as the LLC. It's how you get taxed that changes the verbiage.
Yeah. Marvelyn, thank you so much for all your insight.
Thank you for having me.
I appreciate you and the Arete crew being here with us
course.
today. You guys have been wonderfully insightful. I think our students will really appreciate it. So thank you very much.
Thank you. Pleasure
That's
to be
going to conclude what we have for our panel series. Make sure to complete your lab after this lecture. And if you have questions, feel free to check in on Slack.